Eric Muathe, Muathe.com. Coming close to the end of the trading week, first trading week of 2016. Markets are down again on Friday with about 15 minutes to go, and we can see here the Dow is down about 133 points, Nasdaq down 0.63, S&P 500 down 0.85, and we see that the VIX is currently trading at 25.72. So let's take a look at the charts. We can see here for the S&P 500 for the week down about 5.7% as the weekly RSI jumps from above 50 to below 50. So as you crack below 50 on the weekly RSI, you get this move. Take a look at the Dow for the week, down about 6%. Take a look also at the Nasdaq for the week, down about 7%. Again, Nasdaq cracking below 50 on its weekly RSI level. So what we see here, if we take a look at the Nasdaq weekly, we can see that it is coming back to test the weekly closing lows for 2015. The level to watch there, if the market can hold. Right now it is cracking below that. The level to watch is 4683.92, which represents 2015 weekly closing lows. So anything below that, this market is in serious trouble. Keep in mind that when the market was trying to move higher, this was the line we were using for resistance, and every time we hit this line throughout the last 12 months or so, the market did pull back throughout all this occasion. So resistance here in late 2015, and we are seeing now the market coming off those highs. Now the one thing I wanted to show here, if you take a look at this 4-year weekly chart for the Nasdaq, anybody looking for some type of hope that the market might find some stability here can use this chart for support. You can see that if you take this line, again weekly chart going back to 2012, and draw this simple line on the Nasdaq weekly, we can see double bottom support here for the lows there, uniform activity support for the lows here. We touch that line here for the lows there. We touch the same line there for the lows there, and here we can see this congestion here, support on the green line for the lows somewhere here, and now we are back to test that level. So if that can hold in the coming week, that might be good enough to stabilize the current drop in the market. If we take a look at the daily chart, we can see here we are breaking. Coming into the year, we broke this support line on the weekly, on the daily RSI. We broke through that. Keep in mind that before that, towards the end of December, we had this simple line connecting the highs on the daily RSI. So connecting the highs here, here, and at the end of December, we hit that line on the daily, and we since been back off those levels. And we can see that Friday's movement keeps the RSI below 30.90, which is why we are continuing to see this weakness in the market. Take a look at the Dow daily, and the Dow daily, similar type action. We had a wedge that was forming here in December, and we can see that clearly the market broke through that wedge, which might explain why we've been down as we began the new year, because we slashed through the wedge. We've been down since. We can see here that the Dow continues to be under downside pressure because the RSI continues to hold below 30.9. The last time we were below 30.90 was here, and you can see as long as the Dow held below 30.9 during that period, the market went nowhere. Actually, it went down. It's only after it recaptured that level that it started building on to off the lows. So the risk here is for lower prices until the Dow can come off that 30.90 level. Take a look at the daily MACD, and we can see rejection at the zero line, and as long as both MACDs are below zero, the market should continue to be under some continued downside pressure. If you take a look at the Dow Transports, those of us who have been watching this over the last couple of months, obviously we are not surprised by the current market behavior, because we have seen the Dow Transports broke down again in December below the previous 2015 monthly closing lows. We can also see here that the RSI on the monthly pushed to fresh 3-year lows. So this move here is just consistent with our analysis that this market was looking absolutely bearish, And we can also see that the MACDs were breaking to fresh 3-year lows, and that is why this market continues to be still looking like it could see much lower prices. If you take a look at the weekly chart, you can see here again a fresh move below the December weekly closing lows. That's not good. If you take a look at a 5-year weekly chart for the Dow Transports, you'll see that there's a line that it was trying to defend going back to the lows of 2011, so somewhere from here. So this line has held the Dow Transports during the lows. For example, during this low, it held above the line, came close to the line here during the lows there also. And over the last couple of months, in the middle part of 2015, it held during these lows somewhere there. But now it looks like we are breaking through. So if we take the lows and extend it, this 5-year weekly chart is suggesting that this is a fresh break. And because it's a fresh break, it might suggest that this is a fresh move to the downside, probably with more downside to take place. Take a look at the S&P 500. If you recall, over the last couple of months, we've been trending with, or at least contending with, this resistance on the top side, which failed here in December. We were also seeing resistance on the weekly RSI, something we've talked about on many occasions. Here, even at the highs of December, it hit that level. This week, we are pushing below 50 on the weekly RSI time frame, which might explain this plunge. The last time we moved below 50 was here, during this period here. So this makes a lot of sense based on the way we've been looking at things. We can take a look also at the main MACD for the S&P 500, which is also pushing below 0. So the MACD has been rejected at the 0 line, which is a sign of a market that is still looking to go down, in my opinion. Take a look at the recent 2015 weekly closing lows, because anything below that would suggest that we shouldn't be surprised if these markets continue lower. So the level to watch for the S&P 500 is 1921.22. If it can hold above this level on a weekly basis, maybe it can generate enough energy to move higher. But right now we are looking at the potential of breaking through this. So 1921.55 is a level to watch, which is 2015 weekly closing low for the SPX. Anything below that, and you really don't want to be trying to find a bounce in the current market. If we take a look at the daily chart for the S&P 500, it is making a fresh move. So Friday's move is finally seeing the S&P 500 join other markets in moving below 30.90. And as long as that's the case, that is why we are seeing that this close with about 5 minutes to go is going to be into the close. As markets slash below 30.90, they tend to give up all the momentum, and we are going to see this market close off the lows at the lows because of this movement below 30.90 on the S&P 500. For the upcoming week, we can watch the VIX, because if it can hold above this recent weekly closing high, the level to watch there is 24.39. So anything above this weekly closing high, and the VIX should put pressure to the downside pressure to the general market. Anything above that is solid for the VIX, and is going to be pushing markets lower. So anything above 24.39. Also watch this multi-year closing high for the VIX, which is at 28. So there's another buy point at 28.03. Anything above these two levels, and this market should continue to see some downside pressure. And so if we take a look at the long-term monthly charts, we can see that the level S&P 500 needs to defend is 2015's monthly closing low. The level there we need to watch is 1920.03. Anything below that price range would really suggest that there's the possibility of much lower prices. We can see for the month S&P 500 already down below 50, which might explain why it's already down about 6% for the month already. And here the risk is that the MACDs are already moving to fresh 3-year lows. You can see rejection at the 0 line by the secondary MACD in the month of December. And we are also looking at the possibility that the monthly RSI could be making its first move to fresh 3-year lows, which might suggest much lower prices. So the risk is the S&P 500 cracks below 1920, and we might see lower prices. Otherwise, if it can defend that price range, which is 2015's monthly closing low. If it defends that level, maybe there's a chance the markets might recover. Take a look also at the Dow on a monthly closing basis here, or at least for the month. Anything below 2015's monthly closing low for the Dow, the level we need to watch there is 16,284.70. Anything below that, and this market is really going to be under some downside pressure. For the month, we already seen the Dow move below 50 on its monthly RSI, suggesting that this is a technical reason. Somebody can explain why the market is down about 6% already for the month. If it cracks below 16,284.70, we should expect much lower prices. If it can hold above that price range, maybe this is as low as it gets. We shall see. Take a look at the MACDs, and the MACDs look a little bit on the scary side, because the Dow's MACDs on the monthly are moving to fresh 3-year lows. The other MACDs are below zero and was rejected at the zero line when it tried to rally in December. Let's take a look at the Nasdaq here, and the Nasdaq is coming close to its 2015 monthly closing lows. The level there that the Nasdaq needs to defend, if it's going to do well, is hold above 4620.17, which is 2015's monthly closing low. If it cracks through that, watch out. We can also see that the RSI on the monthly already cracked to fresh 3-year lows. So the RSI on the monthly for the Nasdaq is at fresh 3-year lows, right, which is not good. RSI is coming very close to 50. If the RSI cracks below 50, expect a bigger than 7% drop for the month whenever that happens. We can see that the MACDs are already at 3-year lows for the Nasdaq, cracking below zero on the secondary MACD, so below zero, and making a move to fresh 3-year highs also on the MACDs. So MACDs at fresh 3-year lows, moving below zero. That's not a good sign. So the markets need to hold those monthly chart levels, otherwise we might be looking at a crazy time to the downside. Eric Muadid, Muadid.com. Enjoy your weekend. Good luck, peace, and blessings. EACS.